Yo, what up? What up? So I know you heard this a lot, and it's often been cited that a significant majority of day traders they say they lose around 90%. 90% of them lose their money. The statistic is frequently mentioned and discussed about the risks of day trading. Through the exact percentages, we can vary depending on the source in the market, the specific market that's being referenced. Day trading is inherently risky due to its fast-paced nature and the need for quick decision making. Many traders struggle um, to consistently profit because of the high volatility, transaction costs, and the emotional toll it takes to be the emotional tolls of frequent trades. All right, a lot of you guys get wrapped up and want to make the fast money. Y'all first starting off, and you like you see everybody on the internet and things of that nature making all this money, and you just getting in the market. You want to make the fast money too. All right, we're gonna go over that here in a second. So swing trading, on the other hand, involves holding positions for several days or weeks, allowing traders to benefit from a broader market of trends rather than a short-term fluctuation. The approach often involves fewer transactions and may reduce the emotional stress associated with rapid trading decisions. All right, swing trading can be less risky than day trading, though it still requires a good understanding of the market, disciplined risk management, and a solid trading strategy. So, whether day trading or swing trading is worth it depends on the individual goals, risk tolerance, and experience. Day trading appeals to those looking for a quick return and who can handle the stress, while swing trading might be better for those seeking more measured approach with potentially lower risk. And I'm gonna say that to say this: if you're working a 9 to 5, right? You're getting up in the morning, you're doing a workout in the morning, and you're going to work, you're dropping up the kids. Let's say I just retired from the army, so my morning started at 5 o'clock. That means if I wanted to trade London session, I had to get up at 3, 4 o'clock in the morning. Then I had to be at work at 5:45 to be there to start working out from 6:30 to 6:30 to 7:30, sometimes 8. Get back home, take a shower, get dressed, be back to work at 9 o'clock. Get off at lunch at 11:30. Go back to work at 1300 or 1 o'clock to 5 p.m. All right, that's a whole day. I get off. I get off. Tend to family business. All right, where in the world during the day do I have a legitimate amount of time to trade the 8:30 open, the 9 o'clock New York session, the London session at 3 in the morning, the Asian session? And on Forex pairs, you don't have a lot of volatility every day. All right. So with that being said, this is strictly for those. Now, I understand that some people, hey, get it how you live. You a hustler, blah, blah, blah. And I'm going to look on my phone. And I've seen a lot of people during pandemic trading Forex, constantly watching their phone, looking at MT4, MT5. That's not the life. I'm going to be honest with you. Being as a 9 to 5 worker myself before I retired. All right. That's not the life. All right. So with that being said, you just have to choose what works for you. Okay. You have to choose what works for you. And me personally, even though I am retired now and I'm trading full time, and I'm actually thinking about going back to work. I just like working. I just like to work. That's just me. But at the same time, when I go back to work, because I have some other goals I want to accomplish, I'm still going to trade. Everybody doesn't have to be a full-time trader. It's okay. You can make money, and I own a business, own a martial arts school. All right. So you don't have to be stuck behind a computer all day. And that's why I say, swing trading for me works. Now for you, the person watching me out there, you might want to be a day trader. You like the thrill of trading the 15-minute time frame, the 1-minute time frame, scalping on the 5-minute time frame every single day. But me personally, I've traded those, and I started off on the lower time frames. I wish I wouldn't have, but it's part of my trading journey. All right. So trading the daily time frame, price action is just so much clearer. It's so much clearer. And I have time to do other things in life. I don't have to sit behind this computer all day. All right. Now, when you first start off, you might have to sit behind the computer all day because you're trying to learn. You're trying to get to where you need to get. All right. And then as you learn, if you're a swing trader, you can swing trade and go down to the daily time frame, in day trade if you a full-time trader. Me personally, right now I'm currently, running the business. I just retired from the military and I'm full-time trading, but at the same time, I'm not technically full-time trading like you would think, because I trade on the daily time frame and I also trade the 15-minute time frame. I'm only on there an hour and then I'm out. But me personally, if I had to choose, I started off with the smaller time frames, but I enjoy trading the daily time frame and being a swing trader, being in it for a few days, because that has been profitable for me. All right. With that being said, let's go to the charts and let's go over my strategy again. And I know you always see it. I just keep doing the same thing over and over and over, blah, 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 over and over and over. All right. This was the July time frame, just because we're gonna go over this. This was the July. Let's put down here July trading month. All right. So watch this. Analyze. If you look over here, look at all these pairs. All right. Go over all these pairs. Let's see. Let's just look. Let's move this out the way. All right. So I got 28 pairs on here. You can cryptocurrency pairs. You can go all the pairs. There's 34 pairs right here, but right now I'm looking at the 28 pairs, right? 28 pairs. All right. And analyze the pairs, all right, at the first of the week to look at potential setups. That's why you're looking at it at the first of the week, to look at potential setups. All right. I normally draw this right here. And if you look right here, here's another one. Let's see. That's my August trading. This is just what I do. August trading month. That's just for me. As you can see, there's no setups for me yet on this trading month. Okay. All right. Now look, analyze the pairs of the first week. Find the pairs that match your direction, that all match the direction, meaning monthly, weekly, daily are all the same direction. And you know how you can do that, right? Come down to the Forex Screener. Let's go Euro USD. All right. Type this little button right here that says 1 month. All right. Says neutral. Weekly, strong buy. Daily, strong buy. All right. If you trade in the daily time frame and you look at the beginning of the week, you have a higher time frame that's going bullish. Me personally, I would like all time frames to say super. What did it say? Strong buy, not super, strong buy. This month right here, all 3 time frames said strong buy. All right. And what did I do? All right. Look for the chart for a setup, 2 candle lows or 2 candle highs. Now remember, 2 candle lows. If you hear me say 2 candle lows, let's go after this. 2 candle lows, buy, setup. 2 candle highs, sell, setup. All right, look, 2 candle lows, 1, 2. We have the 20 SMA, and I do this every single time. Go to the indicators up top. You see the indicators right here. Type in SMA. Go down to simple movement average, stocks and box. All right, you hit it. All right, and you go to this little mechanical wheel. You have 20 up here. Type in SMA1. Well, you don't type it in. You just click the button. Make it whatever one color you want, and the thickness and the opacity. All right, come down here, whatever the case may be, the opacity. Boom. All right, then you have the ATR, average true range, average true range. All right, go down to the mechanical wheel, length 5, smoothing SMA, and your style, whatever style you want it, whatever color you want. All right, if you came to here, Look, breaks the SMA. 1, this happened on Wednesday. 2, happened on Thursday. Get what I'm saying? And right here, boom. So typically, you want to put your right here. Let's go back. Let's go. Boom. All right. Enter right here. Put your stop loss right here. All right. And typically, you want to go down to your SMA. All right. And boom. I didn't feel like doing all that. Boom. So you entered on July 11th. Well, I'm sorry, July 12th, that Friday. All right. Then it actually hit on July 4th. So it took you about 10 days because it counting the weekend. It took 10 days to make 200 pips. See what I mean? You don't have to sit here and then every single candle, you can just come and just say you do like this. Look at that. Still trending, Hikinashi. All right. You don't have to look at this candle every 15 minutes, every hour, every 4 hours. You can come back to this chart every day at 1700, which is 5 o'clock. Every day at 5 o'clock. And look, okay, boom, 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 5 o'clock. And you going for the long-term, what you call it? The long-term, what do you call that thing? Trade. My bad. Had a brain for it. The long-term trade. Get what I'm saying? All right. Breaks the SMA, buy signal 2 candle lows, place buy stop at 20% times the 5-period moving average. All right. All you have to do is go to your calculator or go to your Google search down here, type in 20% times the 5-period ATR. All right, let's look at this. Once you line it up right here, the 5-period ATR says 88. You do, this is what you do. So I can break it down Barney style. 20% times 88. All right, equals, oops, my bad. Equals what? I probably have 20. Let's look down here. Let's see. 20% times 88, which was 17.6. So I just made it 18. So 17. All right. That means from that below the SMA to the top. Or you could just do right here. Let's go. Let's go back to replay mode. If you don't like, hey, I don't want to do no buy stop, this and that, blah, 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 blah. All right. I don't like doing buy stop or market orders. You want to go right on the dot. I can show you right here. And then you want to line up your SMA right by the, line up your stop loss by the SMA. All right. Because if the candle goes back down this way, right? If the this candle comes back down this way. All right. Let me see if I can make me a handy dandy candle real quick. Boom. Boom. Come on. Give me some red. Give me a red color. All right. And then we got another one. And it comes back down. Let me move this so you can see it a little bit better. Okay. Or no. All right. Comes down this way. Let's just pretend these as candles. Let's see. It's ugly, but oh well. Y'all get the gist of it. All right. You should be out of the trade anyways, because if it comes back down this way and breaks this candle right here, he's come back to the SMA, you should be out. You should be out. You like, hey, I'm done anyway. All right. So with that being said, let's remove these right here. All right. Come back down here. Now we have a 200 pips, 1-to-1 ratio. That is fine. Because if you're looking at this, use the proper risk management, you got 28 other pairs you can look at. All right. Look, automatically goes into 115 pips. If you want that, here's the thing. Take what the market gave you. If you want them 115 pips because you had the right risk management, take it. Take it. Who cares if you get out? You get what I'm saying? Take it. All right. Let's go up. Look at that. Look at this. 145. If you want it, take it. Oh, one lot, that's $1,450. Look at that. That's all I'm gonna say. That's all I'm gonna say. 200 pips, but you started at the middle of the month. 200 pips. You get what I'm saying? If you was trying to trade this on the lower time frame, right? Let's go to this. Let's look at this one right here. Now let's go to, let's take this out of here. All right, let's move it. And let's come back into, let's open this thing up. See what I'm saying? All right, so here we go. It's the 1 minute time frame, right? So if I'm looking, if I have this, right? And I'm trading, let's just say I'm trading the Asian session. Let's go here and put my Asian session in, and let's a little darker. Let's go yellow. Oh, no, sir. All right. And then let's mark off where we would have got in at 1900. That's when we would have started trading this. All right, cat, let's go 1900. All right, 1900 is when we trading. On our strategy, all right, you have to see this. One, no, one, okay, 1, 2. And you got to try to jump in right there and figure out where your risk management is. Now you have to calculate, you know, how much your risk management is and all that good nature. Look, you getting faked out, you know, because you just started trading, right? You just started trading. So you got 5 pips right here. All right, 5 pips right here. What happened? Hit the stop loss before you jumped in. All right, look here. Long candle, boom. All right, you want to jump in right here. 1, 2. All right, now you back here. You won that trade. Now you 1 for 1. All right. Now you trying to look over here. This is all in the span of 9:22 to 20:53. So about an hour. All right. So the thing about it is, not 9. Did I say 9? My bad. 7:22 to 8:50. So about 40 minutes. All right. So you didn't jump in. Now you 1 for 1. You sitting here, you stressing. All right, here's the next one. You like, hey man, let me see. 1, 2. Nope. We don't have nothing. We don't have nothing. Okay, boom. Look at that. Our strategy. Look at that. Now you 1 and 2. All right, you 1 and 2 because it didn't hit. And guess what? Your actual another setup was actually right here when it hit the stop loss. All right, now you like, boom, I'm gonna go again. Now, here we go. And 1 and 1. All right, now you know 2 and 2. You still at break even. All right. Now you like, I'm gonna take this one. You know, you're gonna get in again. Now, look at that. Come in here. All right, you could potentially let me see. But you're doing this, so you won again. But you're doing this if you don't have the right broker, you paying more in transaction fees than you are making money for 3 pips. You get what I'm saying? You have tremendous opportunities. Look, you finally get one at 12 in the morning. You actually get a real good setup at 12 in the morning. But if you started trading at 7 o'clock, you're not going to be up at 12 in the morning taking these trades. See what I'm saying? It makes sense. That's what I'm saying. Like if you have a daily, if you have a 9 to 5 job at 12 midnight, you probably sleep. You're probably going to be on the charts maybe about an hour to 3 at the most. All right. So we do 2100 at the most. Your attention span ain't that long. So from 7 to 9, you were 1 and 1. See what I'm saying? You were 1 and 1 with the strategy we're using. You get what I'm saying? So that's why I say daily time frame is better for people who have um, a 9 to 5 job. You can still get some sleep, check the charts, have a life. You get what I'm saying? Let's You can just scan through these, scan through them. Look at this. When you come to the chart, right? This was July. 1, 2. You didn't like these trades. It didn't push up enough for you. Boom. You got one right here. Pushed up pretty good. Boom. Right here. Now let's see where the SMA was at right here. All right. Boom. All right. And let's just do this off of assuming you got a 100K account. So you do a one lot. All right. Now let's see. And this is, let's go over here. And that's 128. But we're going to go back here to this so we can give ourselves some room. All right. 3,700, which is 370 pips. All right. We're going to go back there, and then we're going to put our TP right here. Put our TP right there. All right. I got it. These might be all. I don't feel like lining them directly up with each other. All right. See that? And that's if you're taking a prop firm account, a prop firm challenge. All right. This was, let's see where we started at, July. And if you take your time with these things, man, let me see, July trading month. Look at that. And let me see. I'm not going to do that. We're going to just keep going. Now, look at this. What you do is you bring your stop loss to where that SMA is at. Bring your, I know dang well. Bring your stop loss to where the SMA is at. See? All right, for right here, if I'm at 28.56, look where I'm bringing this stop. I'm me personally, I'm bringing it up so I can be at least 300. So if it goes down and it shoots down, I got 300 in the game. You know what I'm saying? All right, let's keep going. It flattened out a little bit. Hey, look, boom, I'm underneath here. I'm at 13.20. 13.20. I got in at July 12th. You started this prop firm challenge, you good. You know what I'm saying? On the 12th, look at that. 13. Look at that. 35.70, 37.75. And that's just one pair. That's just one pair. So imagine if you got 3 or 4 other pairs that traded that month. You got through the first phase in a few weeks. Got to the second phase. Maybe may take you another month to get to the next phase. We're on a daily time frame. But the problem is, think about if that's real money. Not if, I don't say if. Think about when that's real money. You done passed your challenge. See what I'm saying? That's why I like this strategy. This strategy is plain and simple. I hope you guys screenshotted this. All right, and if you like the content so far, make sure you like and subscribe and hit the bell for notifications whenever I drop new videos. And if you've been following me for a while, make sure you comment down below if you like this strategy or if you backtested the strategy. Hell, even let me know what your percentage is. But before you hit me back with your percentage of this strategy or ask me what my percentage is, I see differently from you. So go through all these pairs like I did and backtest it to find out which ones work for you. Then you tell me a strategy. Tell me your win-loss rate or your percentage. Stop going through YouTube. Well, I'm glad you came to my channel, but I'm just saying, find a strategy that works for you. If this strategy works for you, hang tight with it, demo it, backtest it, put in the work. All right, look at that. Plain and simple. Breaks the SMA, buy signal, 2 candle lows, place the buy stop at 20% times the 5-period average, or jump in at market order. All right. Use the 5-period ATR for stop loss. All right. I put it again. Follow economic news. Let me show you something real quick. All right. Today, let's see. Let's go. Is it on this one? Okay, look. I have a bias, right, for this month. All right. So the ATR, I mean the SMA is right here. Right. I put my, let's get this out of the way. I put this at 100 pips. Right. I entered this trade on yesterday, the 14th. News happened. All right, you see? And let's just see where, let's go back and see where the price opened up. We all can see where the price opened up, but let's just use this handy dandy to give us a better outlook on it. Daily, daily, daily. Let's make sure. All right, let's see. Where did it open at? Okay, you're not gonna tell me. I guess we got to go down this way. Okay, so the daily opened right here, but we all know where it opened at because this closing candle was right here. So let's do right here. So from the opening price of, and I ain't gonna take too much more of your time. All right, we went down about 60 pips, 58 pips. Now we back up to 39 pips. So you're in drawdown technically, since you opened up, technically you in drawdown about 30 pips. All right. So on this bias that I have, I see it potentially, where is my thing? Going back up still. All right. Because that's my strategy. All right. Overall, on the higher time frames, it is bullish. So I see it could potentially come down here and then boom. All right. By the end of the month. See, the end of the month is right. Is that 31 days in this month? Nope. 31 days is that Friday. So I have time here. Even I might close it out at the end of the month. It depends on where it's at. But if it breaks back below this candle right here, I'm going to get out. But this is my bias for this month. All right. I can see it potentially because it's still swing trading also saves me from those high spikes in the market. All right. Because if you look at it right here, this was a big candle. This was a super big candle. If you look over here, let's go down to the 5-minute time frame. Look at this candle right here. All right. That candle was huge. Just imagine, for some reason, if somebody saw something, they was like, okay, it bounced off 1, 2, came back up here, whatever kind of crazy strategy you had. And then you took a sell, all right, a buy at this candle right here, because you thought it was going to shoot up for the news. And guess what happened? 19 pips, boom, went back that way. You automatically out. But on the daily time frame, because we have the proper risk, all right, the proper risk management, and enough space for the trade to breathe. That's why I like it. And I was out and about all day, even when the news dropped. Oh, the spike. Oh, the news came out. What news was this? Retail sales came out. All right, 7:30. I was dropping kids to school. All right, here's some more coming out. And if you don't know how to follow this news, you can type this this plus button right here. Go to economic calendar on the side. All right, and I don't want to keep ranting, but if you look, let's see. There's some more news coming at 1500. You can see the strength of it right here. But if you looked at 7:30, let's go to 7:30. Sales. All right, retail sales report. All right, measures the aggregated measure of sales, retail goods for over a period of a month. All right, there's a lot of movement this way. That's why you seen that big candle. But guess what? Didn't affect us as swing traders because we already did put our risk in. All right. Hopefully, this made a lot of sense to you. All right. Hopefully, it made a lot of sense to you and you understood where it was going at. Hopefully, you screenshotted this. Let's go over here. Let's see if I had. Let's see. Oops. Nope. Let's go back over here. There we go. Make sure you screenshot that and go from there. All right. The best thing is, so the main insight of this whole thing is the best trading style for you depends on your personality, risk tolerance, and time commitment. All right. Does it make sense to you guys? All right. If you're more patient and prefer a less chaotic environment, swing trading could be your go-to. On the other hand, if you love the thrill and the chase and have the time to spare, day trading can be where you shine. Let me share a quick personal story. Well, not really. Yeah, it's a personal story. I love day trading. I love swing trading. I love the adrenaline. I was in combat. But I'm going to tell you one thing. Swing trading takes it takes a lot of weight off your chest and off your shoulders because you still have time to make a good decision, use the proper risk parameters, and you get it just feels like a air, lifted off your chest because you're not worried about, oh, am I going in the drawdown? Oh, okay, you go in the drawdown. Most of the times you're gonna win the trade when you're not looking at the chart. All right. You can analyze your trades and more thoughtfully without the pressure of constant market fluctuation. You try to trade the 5 minute. It's going up, it's going down, it's going up, it's going down. You get what I'm saying? All right. So hopefully this made a lot of sense to you. All right. And if you like what you see, after we explore these key points about swing trading and day trading, swing trading offers a more relaxed approach with potential larger gains over time, while day trading provides excitement of quick profits with high risk. Ultimately, it's essential it lines up with your trading style and your personal circumstance and goals. Think about what fits your personal lifestyle and what's comfortable for you. Again, all gas, no brakes. If you found this video helpful, please give it a thumbs up and check out my other videos on trading strategies. I'd love to hear your thoughts in the comments below. Which trading style resonates with you more? Let's talk about it. All gas, no brakes. And just remember, it's all on you, baby. Don't worry about what everybody else doing. It's all on you.